Imagine this, silver has already lost over 15% of its value this year, and now it sits dead flat at $63.50 on Monday, August 10, 2026, as if the entire market is holding its breath. That is exactly where we find XAG/USD this morning, locked in a tight Asian session range and showing absolutely no conviction in either direction. This is not random. The United States Consumer Price Index report for July drops later this week, and it has the power to define silver's next move of several dollars per ounce almost instantly. After a week that saw silver crash to $56.50 and then rip higher to $65.10 in a matter of days, the sudden silence at $63.50 is not peace, it is tension. The question is simple: will the CPI data confirm the Federal Reserve can finally cut rates, sending silver back towards $66.50, or will sticky inflation reignite the hawkish dollar trade and drag silver down to $60 and below? Today, the market is offering no clues, but the setup is potentially explosive. To understand why $63.50 matters so much, you have to rewind to last week's chaos. Just days ago, silver was in freefall, with FX Street reports highlighting a sell-off that extended declines towards $66.50 and then further, as rising bond yields made non-yielding silver deeply unattractive. The weekly summary tells an even more dramatic story. XAG/USD touched a low of $56.50 before staging a sharp rebound that peaked at $65.10. On Friday the 7th of August alone, spot silver surged over 3.1%, closing around $63.46 to $63.54, as safe haven demand and a brief easing of rate fears sparked a vicious short squeeze. That bounce did not come out of nowhere. Weaker than expected economic data in the preceding days had momentarily shifted bets towards a less aggressive Fed, and silver, which often benefits when the dollar stumbles, exploded higher. But notice what happened next. The rally stalled right at the top of the recent range and settled almost exactly where it is now, $63.50, as traders squared positions ahead of this week's real catalyst. That price action tells you a lot. It says the market respects $63.50 as a midpoint, a fulcrum between two very different futures. Silver is not just a precious metal that moves inversely to the US dollar. It is also a key industrial input, which means it gets pulled in two directions at once. But this week, the macro driver is everything. The US CPI report will shape how markets price Federal Reserve interest rate policy for the remainder of the year. If inflation comes in lower than expected, rate cut expectations will accelerate. That typically weakens the dollar, reduces the opportunity cost of holding zero-yield assets like silver, and could easily fuel a fast rip higher. On the other hand, if CPI surprises to the upside, the dollar will strengthen, bond yields will climb, and silver, already down over 15% year-to-date, could suffer another punishing leg lower. The flat $63.50 open this morning is the market's way of telling you it has no edge until that data lands. The tight range is a compression of energy. When it breaks, the move is likely to be sharp and sustained. Here are the numbers that matter. On the downside, immediate support sits at $63. A break below that could invite a rapid slide to the psychologically important $60 level, followed by the recent low of $56.50. On the upside, the first hurdle is last week's high of $65.10. A convincing move through there reopens the door to $66.50, a level silver tried and failed to hold during the earlier sell-off. The base case depends entirely on the CPI print. A cooler figure would likely trigger a rally toward the top of that range, while a hot reading would probably force a retest of the lows. The year-to-date decline of 15.39% remains a heavy overhang, so even a rally will need to prove its staying power. This is a classic inflection point. One piece of data pivots the market from consolidation into trend, and we will know which way the wind is blowing very soon. If you are trading or investing in silver right now, the message could not be clearer. The metal is coiled, waiting for a fundamental spark. Do not mistake this Monday flatness for stability. It is the prelude to a potentially violent directional move. Your job is not to predict the CPI number, but to understand the zones that matter and to have a plan for both scenarios. Watch how silver behaves around $63 in the hours before the release. If it starts to leak lower, that could signal positioning for a hawkish surprise. If it firms up towards $64, expectations may be tilting dovish. Above all, recognize that silver's fate this week rests squarely on inflation data and the Fed outlook that follows. That is the simple, unvarnished reality. Stay sharp, manage your risk, and we will break down the actual CPI outcome right here as soon as the numbers cross.